All right, so this is a little recap on some of the setups that we took today. Um, we took Facebook and Tesla. I'll start with the first thing, which is how you can almost tell what direction we're going to trade or how we're going to open based on pre-market price action. As you probably know, I am a price action trader, and I essentially analyze the bars to get a sense of what's happening and where price is sort of headed. So if you look at yesterday, we had a very strong bullish open. Actually, it was bearish, and then we had a retracement, and then we had a bullish open, and then we went into a trading range. If we sort of take the range, we can kind of get a sense of what is probably going to happen. So if we take the lows and we take the highs, we can kind of see what will probably happen the next day. And the reason being that whenever price spikes, we first go into we start losing momentum, the bears start to make money, and then we go sideways. And as you can see, we sort of spiked up, pulled back, went back up here, double topped, came back down, found resistance on this trend line, and then we tried to test it again. And usually this is a sign that we've reached exhaustion and we're just going to go sideways. And it's usually a 3 push pattern up, 1, 2, 3. At this point, we will probably have a double top, and then we'll start heading down, or we go sideways. So that's usually what you should expect whenever you have this spike channel, and then we kind of go into a sideways training range. And you can always tell when you look at the trend from the previous range, which is this is the first range or the broad channel, and you can see that we couldn't get to the top of this particular trend line. So this kind of shows weakness. And if you think of it from the perspective of, well, if I'm a guy who wants to short this and I see that they can't get a higher price and they can't push that, it must mean that bears are already selling here and they're already putting some pressure. And if you notice, you have a lot of red bars forming. So now we have a downtrend here. So what I will do is follow the trend in the pre-market. So we've kind of pushed up 3 times up and we've kind of gotten tired. We pushed down 3 times and we have an overshoot. And then we now come back down. This is the first push, second push. Actually, this didn't actually, let's do that again. 1. This is the actual thing. So this is the overshoot. So first push, second push, pull back, right? And this overshoot at the top tells you where we're probably going to reverse. So the bulls are already started to buy here, and we're pushing price to try and break and reverse the trend. By the time you kind of count the pushes and you have a third push down, you already know we're reversing. The first reversal is always minor because of how tight the channel is. We come back and test the bottom, a double bottom, and then we now have a change in trend. This is the double top we're expecting. We always have to test these highs. Chances are we'll probably not break it so much because the bears already have been selling here, and this is the level they've established as the resistance level. And so bulls know that too. And so we now see this big, massive bar, which is exhaustion. It's the biggest bar in this entire trend. So in the entire trend, these bars are the biggest ones. And that already tells you that the trend is coming to an end. So that's kind of how I always analyze pre-market data. I kind of look at the trend and count the number of legs. I normally like 3-leg patterns because that shows a wedge forming. And usually when you have a wedge, you usually tend to have a reversal. So the same thing's happening over here. We have another wedge. Here we go. 1, 2, 3. So we can kind of plot this like that. And this is our wedge. First push, second push, and third push, which is exhaustion. And then we now have a 3-leg push pattern down again. 1, 2, and 3. And we now have a reversal one more time. And then again 1, 2, and 3. And essentially what we did today was just played. We took this long from here, 2 to 1, got our around here, took this short from here, got down around here actually, and then we took this long here, got out over here. I actually took a trade long here, had a skunk stop, put our stop over here, got stopped out, but of course this is really the stop you want. So it's the first push down, 1 2 3, and then you now have 1 2 and a double bottom, and then now pushing up again, 1 2 3, and here we go, 3 pushes down, 1 2 3. Essentially you kind of follow the trend that way, and that was that. We did the same thing with Facebook, and with Facebook, similar situation again. This channel is actually not right, but anyway, that's by the by. Came up, pulled back. We have established a resistance level. We broke out. Now if we're analyzing pre-market, as you can see, we have a push up and a push down, and this is the wedge down, wedge bottom. So already we have 1 push, pull back, 2 push, pull back, 3. So this is the rise. This is actually a great credible entry long. Unfortunately, the risk is too high. I wouldn't take this trade long, but you have a 3 push pattern up, 1 2 3. So you could have taken this short on the first bear bar here. This is a great credible short, getting out around here or here, and then you have another 3 push pattern down, 1 2 3, credible long at this point, getting out around here, another 3 push pattern here again, double top, 1 2 3. We actually took a short here, which was a bit aggressive because now the risk was a bit too high, so we had to get out around here. But if we had waited for the second entry, we would have had less risk, because this would be obviously lower probability, but this much, and would have probably made a 2 to 1 over here. Similar thing, 1 2 3, 1 2, oopsie, here we go, 1 2 3, and now push up. So essentially just kind of following the trend, 1 2 3 4, and you can see we had a spike breakout here, and this bar is a breakout bar. Essentially this is a give up bar. The bears who have been holding, waiting for a double top with this, a lot of them shorted over here. They shorted here, pulled price down, they tried shorting again, and they were hoping for a double top here and a micro double top. It didn't work. You now have this breakout, which is them giving up, and so buying and covering as a result. And then you now have a retest, great place to go long, more bulls entered, 1 2 3, nice wedge top, reversal, and then same thing, double top, lower trend reversal, and then the trend's gone down, back to resistance. Now we're in a training range again. Then we break down, and then we've come back to test. So essentially this is a channel down like that, almost. And as again, just by looking at this, you can see there's strength in the bulls, no allowing price to go too far, which is again why we have this breakout. All right, that I thought I just wanted to share was really more pre-market analysis, and using pre-market analysis to determine how you can figure out how you trade the open. And based on that, for me, I would have just waited for this. I mean, I didn't trade this open. What I did was take this short and take this long, and then took this short. So there are 3 trades here and then 4 on Tesla. 1 was bad. But anyway, yeah, like I said, just looking at the trend and following the trend. Once you're very good at understanding trend movements, you can really do very much with it. So here we have 1 pullback, 2 pullback, 3. So we may go sideways and maybe carry on or come back down. But we've done 3 pushes already. We're at the double top. Chances are we're probably going to go down. Yeah, so we're in a trading range here. So chances are we could probably come back down. Yeah, price action is generally the best way, in my opinion, to trade. Once you understand that price moves in channels, the reason why it moves in channels is because that's how bulls and bears establish the regions where they want to trade. So they're selling here and they're buying here, and like they say, the market has memory, so it remembers things like these trends, and based on that you're able to set very good positions for your buying and selling. All right, that's all I wanted to share today. Hopefully everyone had a good day.